But let's have a look at the inversion narrative. We already know what the incentives are, the conflicts of interest. These conflicts of interest lead to what we call essentially a front door to the industry of lies and bullshit. That's what the inversion narrative is. You're being told the opposite of reality and the opposite of truth. So you fall for the narrative and do everything that they want you to do. And these lies and the bullshit is extremely intricate in detail. You've got to have a very, very well-trained eye and understanding in the industry to recognize some of the things that are going on. What does the inversion narrative exist for? It exists so they get paid. And wealth is transferred from your pocket to theirs. It's that simple. First thing we'll look at, introducing broker agreements. This is infrastructure that was inside that chart that we saw of the industry, and we briefly mentioned it. The retail broker provides contracts to people called educators. And these contracts are called introducing broker agreements. Now, the broker has to do this. In every country where there's regulation, the broker has to provide a contract to somebody who is introducing people onto their platform. What do those contracts typically state? Whoever you put on the platform, whatever they pay us, every month we'll rebate you 25 to 50% of the money they pay us. So what does that mean? Conflict of interest. It means that the trading educator is incentivized by exactly the same formulaic process as the broker. So what do they want you to do? They want you to trade in the biggest size possible, as frequently as possible, and believe the inversion narrative, and lose. Now in the US, this happens all over the rest of the world, outside the US. In Singapore, they're banned. In the US, a trading educator can't get a percentage rebate. They'll get a flat rate. But the inversion narrative still exists. Why? If you get paid by the broker as an educator, whether it's a percentage or a flat rate, it doesn't really matter. The outcome is the same. What's the outcome? No, so let's say, for example, you got introduced onto a platform and the trading educator got paid $500 flat rate. Why does the trading educator care how much you trade?
He doesn't.
Well, he does. Because the broker is paying him and he's the broker's bitch. He works for the broker. And the broker will not work with an educator who doesn't push the inversion narrative. They won't even get a contract. They'll have their contract cancelled. So this is why when we look from the left-hand side to the right-hand side of the industry, those red arrows you see are essentially arrows of where the narrative is coming from and the power is coming from. Because all the way from the left to the right, every participant individually, as you continue across, is the bitch of the one next to them. Does that make sense? They won't even get the contract. The contract will get cancelled. And then the trading educator doesn't have a platform that they can introduce their students onto or their clients onto. So then they're lost. They don't have a business. Make sense? They're the bitch. So how does the Institute get around this? We spent 4 years doing this, convincing brokers, because they have to have the contracts in place by law, by regulation. We force the brokers to write 0 on the contract. So it says on all our contracts, the Institute will receive 0% rebate and commission and flat rate. 0. Why do you think we do that? To eliminate the conflict of interest. Because we know if it's there, only bad things can happen. Why would the brokers do that? Do you think the brokers like that? Why would they not like it? Yes, potentially.
They can't get a bitch.
Less bitches. Less bitches, more winners. So think about it like this, right? If you're the brokerage company with 10,000 clients, okay, what did we look at before with marketing? 30 to 50% is spent to get more accounts in, to open more accounts than accounts are closing down, okay? What do IB agreements provide brokers? They provide them with distribution and marketing where they don't have to pay marketing dollars up front. So a trading educator is going out on their own dime, setting up events like seminars, webinars, stuff like this, teaching nonsense, introducing guys onto the platform. They pay commission. They trade as frequently as possible in the biggest size possible. Broker takes the money in. Hasn't cost the broker anything. And then a check goes back out every month, 25, 50%, or a flat rate to begin with in the US, but they won't work with anybody who doesn't push the inversion narrative. So what is it doing? It creates infrastructure that lowers their marketing cost. So if you write 0 on a contract, why would you not want to do that? Because you want the traders to be, the trading educators to be incentivized to get people onto the platform, because it's lowering your marketing cost. It provides distribution. Does that make sense? So the status quo must be maintained. So they don't like it. But there is a discussion to be had with brokers as to why there's a big positive for it. Why? Why is there a big positive? Sorry? No, it's not the revenue streams. Retention is a very, very big positive. So if you introduce guys who only make money, they're never going to close their accounts. Of course. Cheaper marketing. What else? What do you think is going to happen in the future with IB contracts? Who banned them in 2010? Singapore. Who recently banned them? And who recently banned CFDs? Belgium. US bans CFDs. It's our strong belief that IB contracts at some point will be banned everywhere. So here's your first trade idea. First trade idea from the Institute. The morning you wake up and you see the headline, IB agreements banned in UK, Europe, US, everywhere. What happens to the publicly listed brokerage stocks? They're down 80%. Forty, 50% of their clients come from the distribution of individuals introducing people onto platforms. So that's gone. Distribution and marketing is gone. But if you sit there and tell them that, maybe the trade doesn't exist because they can save themselves before it happens. So the conversations we've always had is, this is going to happen, and you know it's going to happen. So you need to set up infrastructure internally that hedges your business against that happening. And the day it happens, all you have to do is send out an email to all of your educators and tell them, here's the new contract, sign it or go away. It says 0. And it can all be sorted out in a day, and you can make a public announcement and say, our distribution stays the same. And where else are they going to go? Because if they've been banned everywhere in the country that they're in, they can't say to the brokers, oh, I don't like that, I'm going to one of your competitors, because they've been banned everywhere. So the infrastructure can be set up very quickly, very efficiently, for the brokers to respond to that in the future. Retention is a big one. Instead of having to spend marketing dollars all the time to open trading accounts, that are opening more trading accounts than are closing down. It lowers marketing dollars because you give them a coupon business. It's like a bond. So if you put 100 traders, like institute traders, onto a brokerage platform, and they're trading 2 or 3 times a week, and they never blow up, it's like the broker owning a bond. They're getting paid a coupon constantly. What if a high percentage of your guys make money? Well, they don't like that either. That's annoying. So they're told to hedge, and if they don't, they've only got themselves to blame. And we don't want to hear them complaining like and crying like bitches on the phone. So we're very straight up with them. We will give you a coupon business and a business hedge, but we want 0 on that contract. You should hedge everything we do because a very high percentage of our guys make money. And we want one thing in return. We want access to all the data. So we can see in real time, under one login, through the back end of your brokerage account, back end of your brokerage platform, everything that every single institute trader is doing in real time. So we can monitor the risk. And they like it. If you want to see our IB contracts, go to the accounts section of the website, itpm.com. So we've got a new website up. We're on an overlap situation at the moment. So institutrade.com is the old website. itpm.com is the new one. We've got the four contracts that we have globally available on the site. You can literally download them in a PDF. Took several years to negotiate them all. The one we have in the States, we've gone a step further now, and we're about to get another one in the rest of the world that does the same. Instead of them writing 0 on the contract, which has taken us 3-4 years to negotiate, prove the infrastructure works, let brokers like us, let brokers see that it works, give them a business hedge, show them that the business is good, and they're just being stupid if they think it's not. The one we've got in the US at the moment with TradeStation, 20% of the money that you pay, well, institute traders pay to TradeStation, gets rebated back into their account every month. So just give it back to them, up to the value of the education that you buy through the institute. So what does that mean? That means you get your education for free. You've just got to commit by putting the money up first to pay for it. Then when you become an institute trader, over a 2-3 year period, you're going to get the money back into your account that pays for the education. So it ends up being free. And we've negotiated the contract outside with a new broker that we're bringing in the next 1 to 2 months. And they're going to rebate 20% in the rest of the world. So what that is called is a soft dollar agreement, called softing. You're providing a service and the broker's paying for it. You're providing a service to their clients and they're paying for it. So we always eliminate the conflict of interest. It's one of the most important principles that we get right in the Institute, that we always implement. So unlike the other educators, we're not incentivized by volume and frequency. We're totally the opposite. We actually want you to make money. Because if you do, it means all of our data is good. So what are they, these guys? The trading educators that have got volume and size incentive. They're essentially the brokers in disguise. They're incentivized by the 4 revenue streams. Well, the three as well. 3 because they get the financing. So not the OTC gain, but the broker is paying them who gets the OTC gain. So they're incentivized indirectly. They just want you to trade as frequently as possible in the biggest size possible. So they're always going to show you trading strategies that pay them, not you. Charlatans, they're known as. Guys who pretend to be traders, but they're not. They're fake traders. They're internet marketing imposters.